Hi, everyone. Welcome back to your Daily Five. My name is Greg Harmon. I'm the founder and president of Dragonfly Capital Management. In Dragonfly Capital Management, we run separate accounts for clients where we manage their money, as well as write a newsletter for those that want to manage their own money using technical analysis mainly and an options overlay. Today, I want to talk about a new theme going on, I think, in the market, and that's the debate between the return to normalcy versus permanent change in what's being implemented and what's being used in the market structure. If we harken back to February and March, where the thought was just sell everything. COVID's happening, the world's going to end, we're going to see a crush to our economy. We don't know what's going to happen. It's the typical reaction, just sell everything. And then we saw, as we hit a bottom in March, a change there, and investors starting to pick winners. We saw things that had been winners in the past being winners again. First and easiest was, well, what are online businesses? What are people going to do when they're at home? And we saw cloud-based businesses. We saw online retail shopping picking up. Then people realizing we still got to eat, supermarkets picking up, all that kind of stuff. It was an easy first play. But the broader markets were lagging a bit. We did start to see then a shift between online and tech-related companies versus broader-based companies versus small-cap companies, which seemed to be normal, right? As we got to the sense where 25 million people, 40 million people were being laid off, small-cap companies were lagging the market. Large-cap companies started to respond and started to move higher, and that was good. But leading the markets higher were those tech companies. NASDAQ 100 eventually made in early May reset to its highs. It's now made new all-time highs. Although the S&P 500 has still been a little bit behind. We've got now, though, this change in the market structure where we've even seen the S&P 500 reach up above 78.6% retracement of its drop, that we're starting to see a shift in the arguments. We're starting to see a focus away from solely news related to new cases of COVID, hospitalizations and deaths. It's starting to be able to see that we're coming out the other side of this and starting to see economic data that may or may not help us in understanding the picture. May jobs report, that was great information, but it's one data point, and one data point makes it really hard to create a trend. Those of us as market technicians know that we can create trend lines, but out of one data point, it's almost impossible to do that, or it is impossible to do that. Then we had Tuesday's report just a day ago from when we're filming this, of retail sales that blew away all expectations. Should people really be relying on one retail sales report to change their investment philosophy? It's a debatable topic. But the picture, just from a couple of data points now, is starting to show us that the depths of what was going on in the crushing of the economy may not have been as bad as what people think they might have been. So what's happening with that? The debate is starting to change. We're starting to see other stories move into the debate now. We've got not just the COVID deaths, not just the new cases, not just the hospitalizations, but we've got, is the economy really a lot stronger than it's been? Has the stimulus really added a lot to it? And will continued fiscal policy changes continue to change the whole landscape of the investment environment? This, I think, is changing the debate within the market for valuations going forward. And the debate is centering now on two camps. One is that we are returning to normalcy. Everything that used to happen in the past is starting to come back. Some places will come back slower than others, but we're going to go back to the normal path, the normal trajectory. And I've got a few charts to talk about there to show companies that have experienced that and to show evidence that that's part of the debate. But there's also this other part that the work from home path has set us down around permanent changes in the economy and who are going to be the new winners. And there are certainly many different examples that we can use to take a look at those winners in the new economy. So for today, I've got 5 charts to show you that head down that path. And hopefully we can get through them and start to talk about this debate to get it started to be centered in your mind to figure out who do you think the new winners are going to be. Will it be those companies returning to normalcy? Will it be those companies that are experiencing a new birth, a growth from permanent change? Or will it be a combination of the two? Let's start with one that had been doing quite well. Lululemon Athletica, the leisure athletic wear, a company that had been running fast and running hard for 10 years or more. A Canadian-based company, in fact, that my wife, as a Pilates instructor, has been using their athletic wear for quite some time. But you saw it become part of the mainstream. It started to be one of those companies that was being used by the general public all the time, whether or not they were working out, whether or not they were doing yoga or some other athletic wear, they were just lounging around in Lululemon activewear. And we see that. We see a steady trend higher through 2019 into 2020 until we started to get a shock into the markets from the COVID pandemic. A quick drop down to a March low, but we've already rebounded and exceeded the February highs. In fact, as of a couple of weeks ago, we had gotten it back up to a point that we were seeing the price of Lululemon stock at 138.2% of the drop that it had made from the February highs to the March lows. And if I can, I haven't drawn this line on here, but you can see, projecting this trend line higher, we've essentially gone back to trend growth in a matter of 4 months. Will this continue? It certainly seems like it. I'm now a big fan of Lululemon as well, and I know that a lot of my friends on the male side have helped to grow this trend as well. But you've had an opportunity here on a pullback to 290. We're now shooting back up above 320 as of recently, and this stock looks like it's a buying opportunity if it gets back over 320. Another example of the return to normalcy is Amazon. Amazon had been hitting on all cylinders, had moved out of a long base through the back half of 2019 up to highs in February, and then hit the shock from the COVID pandemic that dropped it down to a March low. A quick boost higher took it back up to over 150% of the drop. And after a minor retracement, now we see it hovering back above and around the 178.6% retracement. Next stop would be a 200% retracement, which would take us to the point of about 2,800 on this stock. Cloud-based economy. Cloud businesses are still running hard. This is one of those transitional businesses, I think, between the return to normalcy and the new winners in the economy, where shopping online is just going to continue to grow. Who else fits the same vein? Microsoft. Microsoft, more of a cloud-based business with their Azure product, has just recently retraced over 100% of their drop as well after a massive run-up from October last year. What do we do when we took it, the new winners of the new economy? Look, the obvious example of that has been Zoom. Zoom had been operating in a long base, a 10-month base, maybe 12 months or longer since it was first IPO'd in April of last year. Broke out of that in February as it started to be a clear winner out of the COVID pandemic, and has continued to move higher and just keeps going, just keeps going. What else? Docusign, another good example. Who needs to sign documents in person anymore? Let's just do them all online. This one also broke out of a base in September and started drifting higher. Had a minor setback, just back to its 200-day moving average during the COVID pandemic, but has taken off since. Online, things that you didn't need to do in person, but were doing in person because it was such an ingrained philosophy in the past. These are the businesses that you need to look for now as to the new winners in the new economy. That's my Daily 5. Hope you enjoyed it and hope to see you again soon.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.